Hi, Victoria Guida with Politico. Some of the president-elect's advisors have suggested that you should resign. If he asked you to leave, would you go?
No.
Can you follow up on, do you think that legally you're not required to leave?
No.
The Fed just made an unprecedented decision that completely fooled markets and will royally piss Donald Trump off. And just yesterday, 97% of people believed we were getting another interest rate cut of at least 25 basis points, which would have been positive for markets. And I even shared it in a recent video. Instead, the Fed took a hawkish approach and opted for no rate cuts. Now, we may have a war at hand between Jerome Powell, chairman of the Fed and the most powerful man in the world of finance, and Donald J. Trump, the new incoming administration, as well as they set to take the White House in January. And Trump is very gung-ho on saving the economy. However, higher interest rates will tighten credit markets and restrict the flow of capital, which will not be good for his economic plan. Now, in a recent interview Trump had on NBC, it seems Trump wants to take the lead in this weird relationship between the two. Let's listen to what he says.
The chairman of the Federal Reserve, Jerome Powell, said he will not leave his post even if you ask him to. Will you try to replace Jerome Powell?
No, I don't think so. I don't see it. But I think if I told him to, he would. But if I asked him to, he probably wouldn't. But if I told him to, he would.
You don't have plans to do that right now?
No, I don't.
One thing is certain, a heated battle between the Fed chairman and the incoming president likely won't fare well for market confidence or crypto. And whether or not Jerome Powell made the right decision is up to you and ultimately how market participants respond. But I'll be sure to share my opinion in this video as well. And it's not just Trump that's going to be livid, but markets seem not to be too thrilled either, as the volatility or VIX index is up 82% in a single day, and it marks its largest move since the near collapse of the yen carry trade, which nearly wiped out the entire Japanese market and actually affected US and crypto markets as well. Now, here's what's really interesting. The last time something like this happened, this marked a local bottom on XRP and actually many other cryptos before they made mind-blowing moves to the upside. And in particular for XRP, it climbed nearly 500%. However, let's be real, it's always difficult to tell whether this time is the same and you should be buying, or whether this time is different, and whether or not crypto and XRP holders should look for the exit as quickly as possible, as even the Dow Jones is down for its 9th straight day, which is the longest losing streak it's experienced since 1978, or basically 47 years. But if you couldn't already tell, the TradFi markets and crypto markets are highly correlated. And today was the perfect example of that, as this green line is Bitcoin and this red and green price action chart is the S&P 500. You can see that both were climbing in union and then both were dumping really hard today. They're what you would consider risk on asset classes by fund managers and institutions. So when one experiences a deep sell-off, you can reasonably expect the same to happen to the other market. Either way, how the Fed plays the upcoming months, this will have massive implications for your portfolio moving forward, as the Fed is likely going to create for a strict economic environment for banks, businesses, and of course individuals, with just 2 rate cuts penciled in for 2025. Now, the Fed says this is to curb inflation because it's been rather sticky and higher than they previously expected for a longer period of time. And as you can see over on Trueflation, that is very much true, as the aggregate inflation has remained as high as 26% since June till present day. This means that everything virtually costs 26% more on average for average individual or family in terms of cost of living. All of this said, what does this mean for your XRP portfolio or any crypto portfolio? And yes, although your bank might not like the higher interest rates and less lending, and although you might not like wanting to wait a bit longer for some new yearly highs, this may very well be the last best chance we get at solid buy zones and prices before we get a breakout. And all of this we are going to discuss in the video. So if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners channel. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PauliDeFi. That said, just the other day we were mentioning how XRP recently broke above this range right here at about 260 to 263. That said, I also made a note or of a mention of the fact that I would like to hold this range on a serious time frame. Considering right now I'm looking at a 4-hour time frame, I would have liked to see it hold this range on a daily time frame. This would have given me confidence to actually enter with some size. I also made a note of the fact that if we broke down, my next major range of support or a buy zone would be somewhere down here at the $2.20 range. That said, it perfectly aligns with my EMAs. And as you can see here, not only is this a support from this range right here, and I would argue that sometimes you don't want an exact price because you can see that we have wicks bouncing right through here. Sometimes you want to touch as many points as possible. So if I really zoom in here and arguably go down to maybe, I don't know, the 4-hour time frame, you can see that a lot of price action has touched this range. We had a bear trap or an inverse head. Here would be our next major shoulder. Here's our first shoulder. And so this could potentially be an inverse head and shoulders play and a really good opportunity to enter as this looks to be a support. That said, on a 4-hour time frame, we still have a few hours left on the price, but things have dumped pretty hard from the point in which I said this was likely a bull trap. So that is why I didn't want to enter XRP just yet, even though I was tempted, right? I did, and you can watch that video probably a day or two ago where I actually mentioned that. That said, I also said the next major range of support and a buy zone would be somewhere down here. So although markets are selling off really strongly right now, and although it is pretty scary when you see XRP pump all the way, 260 only to get dumped right down to 217, many people might be in a loss. When you zoom out, you can see that we are below that 20 EMA, and I think it's likely that not only will we get at least some level of a support right here, but a potential bounce right back up to at least, I don't know, 240. So that said, I will be watching the price action closely. A lot of the times people think, oh, in order to do good technical analysis, you need a lot of special and fancy indicators. But here's the reality, you actually don't. The things that I use are actually straightforward and basic. Price action, trend, volume to either confirm or deny a move, and horizontal supports and resistances, as you can see right here. Yes, you can play sometimes that diagonal trend line or horizontal, but the horizontals work a heck of a lot better. So that said, when we broke to this recent all-time high and we failed to break to new highs, you can see that volume has consistently been declining even on these sell-offs, which leads me to believe that on a daily time frame, we didn't really get that much capitulation, although we did get a lot of fear selling, if you will. This truly does not look like capitulation to me. And for that reason alone, I could reasonably expect not only the pressure on the buys to continue now in this range below 224, but I would also expect volume to maybe even decline a little bit with an increase in volume somewhere down in this range here, decrease as we continue to trend back up into this range. And so if we break above this line right up here at about 261 last time, it's extremely likely we're going for new all-time highs. So yes, I am currently adding to my XRP positions. Now that said, the reason the crypto markets are tanking so heavily is because the entire market is tanking quite heavily. As you can see here, the S&P 500 had failed to break above this range at about $6,100 here, and then put in a new lower high, and then broke below this range here on today's news, and over the last 3 hours hours in the open market session dumped pretty hard and arguably was one of the nastiest dumps we've seen in a long time. So yes, we are going to get a lot of leveraged liquidations, which is why I always recommend you stay away from leverage. That said, nothing on this video is intended to be financial advice. Speak to a financial advisor. This is for educational, informational purposes only. These are just my opinions. But that said, this is the type of stuff that absolutely wrecks people. And then you have to start over when in reality, we're still in a pretty strong bull market, especially when you zoom out, which is why it's so important to pay attention to the trend. Right down here, we have an October in 2023 local bottom. And so if I were to take a trend line and drop below into these local bottoms right here and touch as many of those points as possible, you can see that we would have had a slight breakdown and a bear trap only to see the market rally. And so yes, we're very close to this range here. So even if we break down slightly lower, I think the odds of this getting bought back up into a Trump presidency is extremely likely. And if anything, this was just flushing out any market participants that had leverage before the next move up. So yes, this did affect crypto markets. And as you can see here, I'll hop on over to Bitcoin. And in similar fashion, we did have that breakdown. Now, here's what's so beautiful about crypto and in specific Bitcoin. It's the fact that not only did we break out to a new high of $108,000, but the breakdown in crypto seemed to be far less volatile this time. So yes, from a percentage perspective, you might have lost a bit of money, but from the perspective of strength relative to the rest of the market, this looks extremely strong, especially if you're looking at a horizontal support and a resistance. As you can see here, we failed to break above this range here once and then twice, and then 3 times we had a bit of volatility through the range. But once we did break out on December 11th, we actually were supported and held the range, and I believe it's likely we are going to yet again. So although this was a bit of unexpected volatility, I think this is a great opportunity to enter the market. Now, the only way that I could see this getting worse is if we truly see an all-out war between Donald Trump and Jerome Powell. The reality is Donald Trump is very pro-economy and would likely like to see lower interest rates, as that increases the velocity of money. It allows more businesses to borrow at lower rates. It creates for more opportunities in the US market and ultimately will prop up the market. However, if you only get 2 rate cuts, as they state right here, then it might spook markets sooner rather than later. And we saw that in the market today. That said, today was a closer call, but we decided to call, or that it was the right call, Powell said at the news conference after the meeting. He later added, from here, it's a new phase, and we're going to be cautious about further cuts. Now, I don't know if this is all politics and they just kind of want to hurt the market before Donald Trump enters, because obviously they're not huge fans of each other, or whether or not he's actually making the right decision. Yes, inflation has been sticky. Yes, everyone is feeling inflation. People who don't even know how to read a chart say that we're in a recession because everything costs more. So that's what we call inflation. And so it is very much true that inflation has remained very, very sticky. We're currently sitting at 26% of aggregate inflation since January of 2020. And if you have this high of a rate of inflation, lowering interest rates at the Fed will likely increase inflation. And so let me know in the comments below what you think is the right decision. Should we keep interest rates higher for longer in order to curb inflation, or should we start lowering interest rates like the rest of the market and Donald Trump want? Now, here's the reality. This time may truly be different. However, I do think it pays to pay attention. As you can see here, I have some red lines that I've drawn. The chart up above, denoted by the blue line, is the Federal Reserve lowering or increasing interest rates. So right back here in April of 2007, you can see that their interest rates were 525 basis points, or 5.25%. That said, whenever we get that first interest rate cut, denoted by the red line that I put right here, you can see that markets were really starting to hurt a bit and then actually continued to dump. And this is what you call the dot-com bubble. Right here, we had the 2008, or the Great Recession, which was the housing bubble. Then over here, we had COVID, where they lowered interest rates to near zero in response to that economic disaster. and back here in response to the Great Recession. Well, yet again, they just started lowering interest rates. Now, here's what's super interesting. After the first interest rate cut, we get some sort of an economic collapse or a crash, and it is pretty deep and nasty. As you can see here, this doesn't look that bad, but right here, as you can see, today looked really bad. However, it isn't actually that bad on a chart relative to what happened in 2008. So that said, just because we are experiencing a bit of a sell-off, and just because there is a correlation between the first interest rate cut and then what ends up happening in markets, which I'm trying to keep all in the same picture here, what I am trying to say is the markets may still have some time left in them, and it might not be until April or May before we actually experience a sell-off, especially because every single 4 years after an election and after the halving and between the months of October through January, we get some insane run-ups in the prices of virtually all cryptos. And so if anything changed this time, it would be the very first time crypto does not experience a true bull run, or at least a bull run through the months of January, February, and March into the next year. Now, here is what's crazy. At the time of recording this video, already we're getting a strong long wick from the downside, which indicates buy pressure. So as I was talking about it, I think we were down to like 220. Currently, we're sitting at 229 on XRP, which means I am going to be adding to my crypto position here, especially in strong performers like XRP. However, I'm going to do it with a bit of caution. If we continue to see a market sell-off because we have previous data that indicates the first rate cut is typically when markets start to sell off or tank, then I am going to start to sell my positions on a further breakdown. However, as things stand, we are still in a crypto bull market, and crypto is actually seeing far more strength than TradFi markets, especially under a bullish Trump administration. So if you enjoyed the video and you learned something new, be sure to subscribe. And also, if you want to learn to do technical analysis like a pro, or you want to become a crypto millionaire in 2025, the best way to do that is by going to the link down below in the description or the bio called bullrunners.com. Here you'll find a 26-minute video that explains everything you get. Now, here's why you're going to want to do it sooner rather than later. Currently, the price is $97 a month. We have like 1,050 some members right now. We're consistently adding to that member list. And here is the beautiful thing. A lot of these people are very active as they are actually paying to be involved. So yes, you're going to learn a lot from them. There is a lot of alpha. However, we are going to be raising the price on January 1st from $97 a month up to $197 a month. And that's because we can only service so many people to the best of our ability, especially as more members join and we host live calls and trainings and share with you stuff we never share on the YouTube channel, especially before we share it with everyone else. The reality is we just can't do as good of a job with so many members. So it's almost a great way for us to sift and sort between the people that are very serious and the people that aren't. And we're giving you one last chance to get in at this price. And once you do, you are locked in or grandfathered in at that rate. That said, we're going to have hundreds of hours of expert classes and courses so you can learn anything you want to learn about crypto and become a pro. We're going to give you altcoin picks from our professionals that sometimes 5x, 10x, 15x, and even 50 plus X. We're going to show you how to get access to the best DeFi yields in the entire space and even give you airdrop alerts. So if any of that sounds interesting to you or you have more questions, just hop on over to bullrunners.com. Again, the time is running out. I look forward to seeing you in the next video, my friend. Thanks so much for hanging out with me. Goodbye.